Today, Bitcoin struggles to hold on to yesterday's rebound. Senate confirms President Trump's pro-crypto nominee Paul Atkins as SEC chair. And Katherine Dowling, general counsel at Bitwise, reacts to Atkins' confirmation and recent regulatory advancements on Capitol Hill. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto markets looking to hold their footing following President Trump's decision to pause many of his sweeping tariffs for 90 days. As of noon Eastern, Bitcoin climbed nearly 2% over the past 24 hours, trading at $78,000, but that's after jumping to the $83,000 level yesterday afternoon, right after Trump's announcement. Ether inched toward $1,500 and Dogecoin rose 2.5% after 21 shares filed for a spot ETF tied to the meme token in the U.S. Meanwhile, most crypto-focused stocks were falling around midday. One big outlier is Janiver. The software company made headlines earlier this week when former Kraken execs took majority ownership. Now it was up by roughly 40% midday as the company begins to buy Solana. And taking a look at Jack Dorsey's Block for a moment, shares of the company fell by more than 7% after it reached a $40 million settlement with New York state regulators. The Department of Financial Services accused the payments firm of failing to comply with money transmitter and virtual currency regulations. We reached out to Block, and a spokesperson told us this marks the resolution of all previously pending state money transmission license matters, and that Block did not admit to any of the department's findings. Be sure to stay with CNBC for the latest market moves as prices have been changing rapidly over the past few days. All right, let's talk about the top stories. President Trump's pro-crypto nominee for SEC chair, Paul Atkins, got the green light from the full Senate. The upper chamber confirmed his nomination in a 52-44 vote yesterday evening. Atkins, widely viewed as a champion of crypto, is expected to be friendlier toward the industry compared to his predecessor, Gary Gensler, whose approach of regulation by enforcement made him an adversary of the crypto world. During his opening testimony before committee last month, Atkins said he will work with SEC commissioners and Congress to build a crypto regulatory framework. Atkins is a former SEC commissioner and was tapped by President Trump for the position in December. Sticking with the SEC, OpenSea is urging the regulator to rule out NFT marketplaces from its purview. The NFT platform penned a letter to Commissioner Hester Peirce, who heads the SEC's crypto task force, proposing, quote, the SEC clearly states that NFT marketplaces like OpenSea do not qualify as exchanges under federal securities laws. The letter argues that by definition, OpenSea is neither an exchange nor a broker. It also adds that classifying it and similar NFT marketplaces as securities exchanges or brokers would be regulatory overreach should the Commission conclude that some NFT transactions constitute securities. This comes as the agency invites input on digital assets to be discussed in a series of roundtable discussions that kicked off last month. Last summer, OpenSea revealed it received a Wells notice from the SEC, then under Gensler's leadership. That investigation came to a close this February, according to its CEO, Devin Finzer. The agency, of course, has been easing its crypto stance since Gensler's departure. All right, in the wake of all these headlines involving the SEC, Crypto World's Talia Kaplan spoke with Katherine Dowling, General Counsel and Chief Compliance Officer at Bitwise, for our main story. Dowling weighs in on Atkins' confirmation and recent regulatory advancements related to stablecoins here in the U.S.
Katherine, thank you very much for joining us here on Crypto World.
Thank you for having me.
So the Senate confirmed Paul Atkins as SEC chair last night, and late last month, Atkins testified before the Senate Banking Committee and noted that since 2017, he's led industry efforts to develop best practices for digital assets, and that it would be his top priority to provide a regulatory foundation for crypto. He said that he will work with commissioners and Congress to make that happen. Now, Atkins would succeed Gary Gensler, of course, whose notorious regulation by enforcement approach to crypto aggravated the industry. What's your take on this latest development? I heard you call Atkins a great choice for SEC chair in recent months. Can you elaborate on why you think that is and how his reign over the SEC would compare to Gensler's as it relates to crypto?
Yes, Atkins is a great choice, and you can kind of determine a great choice by seeing the reaction of Senator Warren to his selection. She put out a letter to Atkins in advance of his confirmation hearing, but obviously he passed through, and we're hearing that he should be able to take office as soon as the end of this month, which will be fantastic. I think he's a veteran in the industry. He knows and understands crypto, and he will bring that to the table. And in coming as the leader now to the SEC, it'll be great for him to combine forces with Commissioners Ueda and Peirce, because they have already even before his confirmation, begun a transformation with regard to the treatment of those of us in the digital assets business ecosystem. They've already had a number of reach outs. Obviously, the formation of the crypto task force has been a game changer. Purse has been speaking with a number of us in the industry. She put out a list of questions. I'm working with the Digital Chamber and a number of other folks to put together answers to those questions as the crypto task force looks to prioritize which areas they should look to first, and what changes we think should be made to help and foster the businesses in this space, as opposed to push them offshore, which was kind of what was happening during the Gensler era with the regulation by enforcement, instead of a more measured approach to regulation, which is what we are now seeing. And I think it's important to note that this is not deregulation or no regulation. It's not, let's get rid of all rules. It's not that at all. What it is a recognition that the prior construct of rules did not fit the digital asset space. I think the way Gensler used to say it was that the digital assets businesses were not actually engaging in these rules. But in the reality, there were a number of, if you just take like a basic example, take a form for a traditional finance firm and try to fill it out for one of these digital asset businesses. You needed to have new questions in order to be able to answer them, and you needed to have new information, classifications. And I think that was recognized by both UEDA and Purse in the past, but being in the minority, they weren't able to foster an agenda that allowed for more dialogue and rulemaking, as opposed to enforcement based on more of a traditional finance construct that wasn't working with these digital asset businesses. So it's great to see what we're seeing, and I think that the dialogue has been important, and we're also looking at some key legislation as well in the offing.
Some crypto skeptics might now worry that now that the SEC has a pro-crypto chair, we might see a big new wave of fraudulent behavior, similar to what we experienced back in 2022 and 2023 with events like the collapse of FTX. So I'm curious to get your insight on this view, especially given your law background and extensive experience in the U.S. Attorney's Office in the San Francisco Bay Area, focusing on economic crimes.
Yes, well, absolutely. I think it's important to note that some of the prior fraudulent activity was with regard to offshore entities. So with regulation and creating perimeters and barriers with companies onshore, you're actually creating more regulated products that investors can select, rather than investors looking to get into these assets and going offshore, where there's going to be less transparency and there's going to be more possibility of fraud. So I would argue that part of the FTX debacle was because there was a stage of the SEC kind of ignoring crypto entirely. Then you had a stage of the SEC under Gensler engaging in regulation by enforcement. So now creating measured, regulated products within the United States ideally will create actually safer products with more transparency, more disclosures with regard to how they work and the inherent risks in those products. So investors should be able to make a better choice when you have those regulated products.
So even before Atkins' confirmation yesterday, we saw the SEC drop some lawsuits involving crypto companies. Just last month, Ripple CEO Brad Garlinghouse said the SEC is no longer pursuing its appeal in the case against his company. Also last month, Crypto.com said the SEC has closed its investigation into the crypto exchange. Other crypto exchanges and companies, including Coinbase, Kraken, Robinhood, Binance, and OpenSea, all previously saw lawsuits or investigations dropped, resolved, or put on hold. What do you think about all these developments, and what do they signify?
What they signify is really what the current commissioners Purse and UEDA have been stating prior to the departure of Gensler, which is we need to actually have less regulation by enforcement, and we need to look at classification of these digital assets. So one theme of those cases is that a lot of the SEC's case around those different entities that have been dropped, dismissed, or put on hold stem from what is the classification of these digital assets. Because for the SEC to have that jurisdiction to go after these entities for this regulation by enforcement, they're assuming that a number of these assets fall into the category of security. But if that definition is not fitting that particular digital asset, or if it's called into question, or if it's not clear, it really calls into question the foundation of those cases. And that's what you're seeing. And if you look at the Ripple litigation over a span of 4 years, hundreds of millions of dollars being spent, what have we gotten out of that? We've had different voices, different opinions. We've had summary judgment motion that kind of split the baby. But you see 4 years trying to figure out which direction you want to go in that case. But what you don't have is a clear definition of, well, what makes it a security or makes it not a security. And that gets to what I would call market structure legislation, which is needed, which hopefully is coming soon. We've been saying that for a while, but hopefully with the forward development in Congress, we'll get this market structure legislation.
Sticking with regulation, currently there are 2 bills traveling through the House and Senate, the Stable Act and the Genius Act, the stablecoin bills. Do you think those bills go far enough?
I think they do. And I think it's really important that we push forward with the momentum I was talking about earlier. I'm being told, I was in Washington last week, that there are enough votes for both of them. So I think that's really positive. And I think it's a really good start. I wish we had this, over a year ago, but we're getting them now. And I think it's a great first mover.
Dowling also weighs in on developments tied to staking, which is a way for investors to earn passive yield on their crypto holdings by locking tokens up on the network for a period of time. You'll be able to check out her full interview over at cnbc.com/cryptoworld. Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.